Okay, again, good afternoon, everyone. Caribbean Blue here, and welcome to today's session. Today's session is with regards to the pattern recap of the Bat Cypher and Gartley, and this will be the end of this particular series and the end of the series for the year. Um, of course, we will look to do some other sessions. Oh, let me just mute someone here. Okay. Um, yeah, so we'll to get on to some other sessions during 2018, God willing. So I'll put you on to Mr. Eccles as we go for the pattern recap for today. Donnie, take it over.
All right. What's going on, everybody? Can everybody hear me good, loud and clear? I hope
Yes,
so.
sir.
If you have any questions, what's up, Sean? If you have any questions or something, I'd rather you unmute your mic, say it out loud, because I don't know, I don't like navigating through Zoom too much. Every time I try to do something extra, I end up knocking everything out. So versus typing it in the chat, I'd rather you unmute if you have a question. I'm Donnie. I'm down here in Atlanta. I'm a Forex trader. I'm representing for FX Legacy and Caribbean Blue. Today's session, we're just gonna do a little quick overview of really my three favorite patterns: Cypher and the Gartley and the Bat. So without any further ado, we're gonna get right in it. We're gonna start off with the Cypher pattern. So just like with any other harmonic pattern, Cypher pattern starts by making an impulse. This would be a bullish cipher, by the way. Bullish one first. Once price action, breaks through previous structure, and we have an impulse up right here. We're going to identify the impulse as our XA leg, or X to A. This is our anchor leg or impulse leg. Once the impulse leg has been identified, we bring out the Fibonacci retracement. We begin to project where B will complete at. So once our XA move has been identified, we look for the market to pull back to a minimum of the 382 retracement, Fibonacci retracement. Now, this B leg is going to be invalid if we don't come down to this 382. It's also going to be invalid if we come up to this 618 and close beyond it. That being said, we need a minimum 382. Now, if we break past this 382 and hit the 50%, that's fine. If it closes there, still a valid B leg. If it hits 618 and decides to close above, that's going to make this B pattern, this B leg, invalid. So what we need is a minimum 382, and we need price to, even if price wicks to past the 618, it's fine as long as it doesn't close beyond the 618. We'll have a valid B leg. We'll sit it here. So we can see the B completed at a little bit past the 50%, but that's fine. After we have a valid B completion, to project our C, we have to go from X to A, back down to X with the Fibonacci extension. And we're looking for the market to extend to the minimum 127. Market doesn't come up to the 127. This is an invalid C leg, and we can't consider it a valid cipher pattern. But we hit the 127. We break the 127, still valid. We can even break the 141, but we cannot close above the 141. If we close above the 141, this pattern is invalid, and we should be looking for something else, but not a bullish cipher in the case of it closing above the 141. But again, it can wick past the 141 as long as it closes below, and as long as it makes it up to the 127, then it's valid. So we'll sit that there. We'll label that our C completion. So once our BC move is complete, it's when we begin to look for our D completion and where we will get into the market at. In order to find that, we got to go back to the Fibonacci retracement, go from X all the way up to our C completion, the full move, and we're looking for price to come down to the 786 of X to C every time to complete D. Uh-oh, tripping. D completes at the 786. At that point, we will have our bullish cipher. We'd be looking to get long at this point, take a ride up. Do I have any questions? If not, let's draw the bearish cipher. Same rules, just in the inverse. So on the bearish cipher, whoa, get out of here. I just hit him. On the bearish cipher, we look for an impulse down, breaking through previous structure on the way down, of course. Labeled the same. Start of our impulse is labeled X. End of our impulse is labeled A. After we've identified our impulse leg, we can project where B is going to complete at. Means we got to bring the Fibonacci retracement from X to A, and we need a minimum pullback. We need price action to reach at least to the 382. It can pass the 382. It can hit the 50%. It can even hit the 618 as long as it doesn't close above the 618 again. It closes up here, invalid cipher, and we'll be looking for another pattern. But in the case that it just wicks past the 618, closes below the 618, as long as it hits the 382, we have a valid AB move. And we can begin to look for where C will complete at. To find C, different tool, got to break out the Fibonacci extension. We take it from X to A, back up to X. Here. Again, we're looking for this BC move. We need price action to come down and hit a minimum 127 extension. If price doesn't hit the 127, again, invalid pattern. But we can hit the 127, break the 127. We can even break the 141. We cannot close above the 141. We close above this 141, invalid C leg, and we can look for something else. But in the case that we don't, and price makes it just past the 127, we can label that our BC move and project what a pattern will complete at and where we will be getting into the market at. Now, to find our D completion, Fibonacci retracement, get the whole move from X to C. And we're looking for price action to come out, roll all the way up to the 786 every time. We don't reach the 786, probably didn't get in because trading these patterns, we're usually going to be using limit orders. Probably set it right up at the 786. If it doesn't make it up there, the pattern didn't complete. But Again, we look to get short right here to complete our CD move. And what we will be looking to get into the market. Now I'll go ahead and go over targets and stops now, since we got 3 patterns to cover real quick. Now, we understand that this D completes at this 786 of this entire move. Upon this completion, we get in aggressively right at the 786. We put our stops. Rule of thumbs, we go 10 pips up above X being at 83065. So we set our stops at what? 10 pips above up here. Of course, we'd be looking at previous structure. So we say 10 pips, but on the higher time frames, that'll be a little close sometimes. But what I generally do is a Fibonacci extension, well, an inversion. I take Fibonacci extension from A to X, back down to A, and I bring in the 113 Fibonacci extension, and you'll find that a lot of times it'll line up with the 10 pip rule, and it'll line up with previous structure. Again, you set your stops a little bit on top of that 113. That way you use the 113 every time you got a consistent way of using stops, so you're not getting stopped out too early or whatever. Again, targets wise, Fibonacci retracement from X. Well, we're gonna go from D to C, C to D rather. Conservative way to exit this trade where we take profit 1 at the 382 and we take profit 2 at the 618 of our CD leg. Do I have any questions before we go to one in the market?
Guys, just a gentle reminder that you're all muted, so feel free to unmute your microphones and ask questions.
Moving right along. I got the AU 4-hour pulled up because I noticed Cypher pattern right here in this area. I don't know if y'all see it. Again, identifying these patterns, noticing that we have an impulse here. Whoa, we have an impulse here. Sorry about that. Stretch it out a little bit. Boom. Noticing that we have an impulse down here, break through previous structure. We labeled this our X to A move. Again, this is going to be a bearish cipher. Once we've identified X to A, we bring out the Fibonacci retracement to X. We go from X to A. We can see that the market made its pullback, came right to the 382. Knowing that coming up to the 382 is a valid BC move. We didn't close above the 618. We didn't even make it up to the 618 in this case, but we did make it up to the 382. So we had a valid B move. Once the B move has been identified, we bring out the Fibonacci extension. We take it from X to A, back up to X. Knowing that we're looking for a minimum requirement for the market to price action to extend down to the 127. We can see that it does. It actually extends all the way down to the 141, but again, it doesn't close above the 141. It touches the 141, comes back up to the 127 zone, and continues. Nonetheless, if price does decide to break past this 141 and it doesn't close past the 141, we still get the whole move. So we drag B all the way down to where the market wicked to, and we call that our C move. Now, once we have a valid C, this is when we bring out the Fibonacci retracement from X all the way down to C, and we would have been looking for the market to push all the way back up to the 786. And as we can see, boom, hit the 786, broke past just a little bit, didn't quite hit the 886. But again, once we were projected at the 786, we would have had our limit order sitting right here. Price would have came up here, knocked it out. Would have completed our bearish Cypher pattern. Okay. Decompletion. Again, once we had set our limits up here at this 786, Fibonacci extension from X to A, from A to X. This is an inversion. Back down to A. Set our stops at the 113. You see the price never makes it back up there. A lot of room to play. As long as you're 10 pips on top of X is pretty safe, because once price makes it to this X, if price were to break X and close on top of X, then I'm going to be looking sort of funny at this pattern, because we understand that X is going to always be at pretty strong support. Again, stops never violated. Let's get rid of this. Get rid of this. Yeah. Our targets, we would have went from C to where D was projected at. Once D made it up there, we would have moved it to here, though. We'd have been looking to get out of the market at take profit 1 at 382. Take profit 2 at the 618. See the stop. Stops would have been up here. Pretty good trade. Boom, boom. Again, we might not have. Once the market came down and took out our 382, what you want to do is take your stop loss and move it to break even. So we can ride with it. Take profit 2, 618. Now, if the market comes back up to break even, we've made money. We've took one position off, haven't lost any money. It's basically a risk-free trade. But you can see that the market completely rolled over, and maybe we would have just kept moving stops and ate all that up. You see how strong this Cypher pattern is. Do I have any questions on the Cypher pattern before I move to the Gartley? Got to roll through pretty quick, having 3 patterns. Any questions? Feel free to unmute your mics.
And this was the Cypher, right?
This was the Cypher pattern.
Okay.
What you need to know? You need to know anything
The
about
I guess because I get kind of confused on this one. And you probably just said it, but I just didn't catch it. The credentials as to the valid Cypher pattern. I know I probably missed it, but I just need to make sure I got it wrote down correctly.
All right, so X to A. Once we've identified our X to A move, which is just the impulse, we'll be measuring everything according to that move, of course. From A to B, all we need is a minimum 382, which is what this pattern did. We need a minimum of a 382 retracement. If it doesn't hit the 382, then it's not valid. It's not a valid retracement period if it doesn't hit the 382, but we need a minimum of the 382. If price makes it up to the 618, it's fine, but it can't close above the 618. So we can wick to the 618, we just can't close above it. So we can go from the 382 anywhere in between 382 and 618, as long as it doesn't close at or above the 618, you have a valid B move. After the B move has been identified, we take the Fibonacci extension and go from X to A. Go from X to A, back up to X, and again, we're looking for that minimum extension of the 127. So our C move has to hit a Fibonacci extension from X to A, back up to X, of the 127. It can even hit the 141 as long as it doesn't break and close above the 141. If it breaks the 141, that's fine, as long as it comes back down and closes below the 141. So minimum 127, pretty much maximum 141 as far as closing. And after you have identified C to hit a 127, you need a Fibonacci retracement from the whole move, X to C, and then that's when we're looking to enter at the 786 every time for the Cypher pattern. You want to enter at the 786, which again would have been right here, broke a little bit past, but didn't close at all above the 786. Took off from right there. Boom, pretty much a perfect Cypher pattern. They get you right there.
Yes, sir. Thank you.
Not a problem. Now we'll go to the Gartley. Break out my Gartley pair. All right. Just like the Cypher pattern, we look for the Gartley to make an impulse to create an XA leg. Boom. Started an impulse label X. And where price action turns at or completes that. We look at A, have our XA move. Now for the Gartley pattern, which this is going to be a bearish Gartley. For our AB move, we need price to come all the way up to the 618 minimum. We need a minimum of the 618, yet we can't even touch this 786. If we touch this 786, pattern's invalid, which we'll be looking for a butterfly or something like that if we hit at 786, not a Gartley pattern. So boom, 618. Once we've identified the price has made it to the 618 and doesn't want to close, doesn't want to break above, we can identify this is our B leg. This is our AB move. Boom. Now just like we found our, well, not just like, instead of using the Fibonacci extension for our BC move, for the Gartley, we use the Fibonacci retracement for our BC move. We take Fibonacci retracement from A to B. We look for price to, all right, that's messy. We look for price to hit a minimum, again, of the 618. We have to hit the 618 in this BC move in order for the Gartley to be valid. So again, if we hit the 382, not a valid pattern. If it hits the 382, it's probably taking off to go up there, make a butterfly, but okay, can't hit the 50%. We have to at least hit the 618. But as long as we don't blow past A and close above A, we can even hit A, form a double bottom, and it still be a valid Gartley. But in the perfect world, this Gartley pull back our BC move, we hit the 618, boom. We label it C. Once our C move has been identified with the Gartley, we're projecting an equal measured move. That meaning, once C has made its move, we're looking for the market to form an equal measured move and complete pretty much exactly at the same length. Same price. Not the same price, but we expect the market to move in the same price and time, so to speak, as our AB move to form our CD move. Now, after we've made our AB equals CD projection, we're going to want to bring a Fibonacci retracement from X to A. We're looking for price to at least hit the 786 for our decompletion. And we can see that we go past the 786 just a little bit, which is fine. We're also looking for Fibonacci extension from our X to B move, A to B move, back down to A. And we're looking for a 127 extension. And you can see the price past that too, but that's fine. It's not going to be perfect every time. So we would have had a little tight zone on this one, basically right here. We would have entered right here, and we would have been expecting price to roll over right here. We'll go over stops on our bullish version. But again, we look for D to complete at the at a retracement of the 786 from our X to A move, and an extension of the 127 from our A to B move. And that would have been our decompletion, where we were looking to get short on this Gartley. Same for a bullish Gartley. We'll do a bullish one now. Boom. We'll be looking for the market to make its impulse up. Once we've identified the impulse, we label that X. This is an X to A move. Which is the same way that all of our patterns start. The impulse leg. After we've identified the impulse leg, we look for the market to form a pullback, X to A. We need a minimum pullback of the 618. If we don't reach the 618, it's invalid. If we blow past the 618 and we touch the 786, even if we wick to the 786, we just got to touch it a little bit to invalidate this pattern. pattern is no longer valid if we hit this 786. But if we come almost to the 786, it's not a problem. We have a valid B leg. After we've identified that B has completed, has not touched our 786, has hit our 618, we break out the Fibonacci retracement. We go from A to B. And we're looking for this guy to pull back all the way to the 618 again. But we can hit, as long as we hit the 618, we can go down to the extreme lows of A as long as we don't break above A in this case. We can even double top, that'd be a valid C leg. But again, as long as we hit the 618, got a valid C leg as far as our Gartley pattern goes. Yeah. Now, again, we're looking for AB equals CD move to complete our pattern. This means that we would clone our AB move. We tag it all the way to our C move. And this is how we get our D. This is how we would project for our D move to complete. Once we've cloned our A, B move, we go from X to A with the Fibonacci retracement. We'll be looking to see confluence around the 786. We can see that it broke past the 786. It's hitting this 886 right now, but that's fine. So we're going to use the Fibonacci extension. We're going to go from A to B, back up to A. And we would have been looking for the 127. We didn't make it up there, but we can see that 786, we would have been looking to get short in this zone in between the 786 retracement of our XA move and also the Fibonacci extension of our AB move would have created this nice potential reversal zone. We would have been looking to get short here for our decompletion. Better write that D in there. All right, let's get rid of some of this noise. Targets and stops. What's this? We'd have looked to enter at that 786, in between that 786 and that 127 extension, of course. Boom. Now, stops. Again, we're going to use the Fibonacci extension. We're going to do an inversion. We're going to go from A to X, back up to A, which is sort of backwards. This is how we use stops to make sure we're using the same method every time. Placing stops at the 113. And we're looking to get out of the market and cash in. Well, we go from A to X, from A to D. Drag it from A to wherever the market completed at, our decompletion. And again, we're looking to take profit 1, 382, take profit 2 at the 618. Stops would have been right here. So you can get a picture of risk reward right there. Oh. Something like, yeah, it's a little bit more than 2 to 1, so yeah. And that's the Gartley pattern. Any questions before we find one live? Or not live, but all right. So I found one right here on this Euro Pound 4-hour chart. I don't know if y'all noticed it yet. See if you see what I see. Again, we're looking for an impulse, and this is going to be a bearish Gartley. So I have this impulse down, breaking through all previous structure. If we look left, broke right through there. Came down here. Yeah, we even broke past that. All right. Impulse leg. We label the impulse leg XA every time. After we notice that we have an impulse, we've been looking for the market to make a pullback. Price action to make it all the way up to the 618. As we can see here, comes right to the 618, respects the 618 zone real well. Turns back to the downside. B completion. Now, to get our C, Fibonacci retracement from A to B, we need the market to pull back to a minimum of the 618. And again, we got 618 respect right here. Break past the 618 a little bit, can't make it to the 786, which if the price had came all the way down to here, even down to here, we would have had a valid pattern, but it didn't. It was respected our minimum 618, gave us our valid C leg. And this is where we look to get our A, B equals CD move. So in this case, we would have took and cloned our AB move. Boom. We would have drug it to where C completed at. And we would have been looking for a zone at the price at the 90018 zone. So once we have our equal measured move and we're projected to complete right here, what do we do? Let's get rid of some of this noise for one, because we understand that everything else is valid. Fibonacci retracement from X to A. First thing we're looking for, 786 confluence. You can see that it has us going past the 786. In that case, we break out a Fibonacci extension. A little bit off. And we would have been looking for price to make it to this zone in between our 786 of our XA move and our 127 of our AB move extension. And we can see the price actually made it up here. Again, we were projected to complete right here, so not too far off. And stops definitely not hit. And this would have been our, I'm tripping. It's a little bit ugly, but you get it. Have our decompletion up there just past the 127. And if you're noticing, it's usually the 127 is getting the respect from this Gartley pattern. The 127 is what I've been back testing and noticing that gets the most respect. As far as that's just what I've back tested though. But again, we've been looking to get up there short stops. Fibonacci extension from A to X, back down to A. We would have been sitting up here right above. Previous structure, you can see the price never makes it up there. And the market rolls over. We would have got out conservatively at the Fibonacci retracement from A to D. We'd have got out right here at the 382 and at the 618. Both targets hit. Stop loss in check. You see how powerful the Gartley pattern is. Do I have any questions? Damn, I got rid of this. Concerning the Gartley pattern. In this case, let's go to the bat pattern. All right, bat pattern. This is the easy one. We don't need any of that Fibonacci extension stuff. All right, just like the other patterns, impulse. Got an impulse down. This is going to be a bearish bat. We label all our impulses the same. It doesn't matter what pattern it is. Harmonic pattern, that is. Got our X to A move. Once we notice that we have an impulse leg, we're looking for price to pull back to a minimum of the 50%. If we do not reach this 50%, this pattern is invalid. Although I have seen people trade the bat from the 382. I was taught with the 50, so that's what I go by. So we're looking for a minimum up to 50. If we hit this 618, we know that that's a requirement for the Gartley pattern. So we know that the bat pattern is invalid once it hits the 618. So B leg is pretty simple. We got to hit this 50. Can't close below. Can't close at can't touch the 618. So boom. Our B move has to hit the 50%. Can't close below, can't go above the 618. We have a valid B move. After we've noticed that we have a valid B move, we look for the market to pull back from A to B. And we need a minimum retracement of the 382. Maximum retracement of A, meaning if we hit this 382, that's fine. Well, that's a different 382 here. Let me get rid of something. Oh no, that's the right one. Yeah, let's move it over. Sorry about that. Again, we got to hit a minimum of this 382. We can pass all of our other Fibonacci levels as long as we don't break past A at 100%. We're fine. So boom, hit the 382, and we'll know that we have a valid C completion. At that point, we can use the same Fibonacci retracement that we drew from X to A down here. And we're looking for our D move to complete up here at the 886 every time. And you had a bearish back pattern, which is the easiest one in my eyes. All right, let's get rid of this stuff. I don't want to delete all drawing tools because I got my back pattern marked out. I don't want to take too much time looking for it. All right, we can use these guys. Now, let's do a bearish one. A bullish one, rather. Same goes for the bullish back. We look for the impulse. In this case, X is going to be down here. A is going to be up here. B should be somewhere around here at 50%. So once we've noticed that we have an impulse leg, we're going to take Fibonacci retracement, pull it from X to A. And we're looking for a minimum retracement of 50%. Again, if we don't reach this 50%, we know that it's invalid. If we hit this 618, we also know that it's invalid. What am I doing here? Tripping. Get back there. When you get it. All right, once we've noticed that we got a valid B move, A to B move, bring out the Fibonacci retracement from A to B. And we're looking for the market to pull back, make a minimum pullback about 382. But again, we can 50%, 618, all the way to the 886, all the way to 100%. And this is still considered a valid C move as long as we don't break past A. And then we'll be looking for the market to complete at the same place every time, which is the 886. Which is the 886 of our X to A move. For our D completion. Whoops. They have a valid bullish back. Once we notice the D is completing here, again, Fibonacci inversion. We use the extension and we go from X to A, back to A. Put our stops down there to 113. Fibonacci retracement from A to D for our targets. And we're looking to get out of the market where 382. $618. Any questions? Whoa. Moving right along.
I have a question.
Let's go.
Are most of the patterns that are done, are they pretty consistent as far as doing back testing and seeing the actual live market moves?
Yeah, they're pretty consistent, bro. In fact, if you got these credentials down, you know what the requirements are. I recommend going through and I mean you can find them all day. You can go back and find old. Even here, I'm gonna go back. I got one marked out because time session, but over and over again, they happen over and over again. I could sit here and find them, but I marked them out because we're timed. I ain't got too much time.
So this is back testing, right?
Sir?
This is back testing?
This is more so this isn't really back testing. This is pattern identifying right here.
Mm-hmm.
After you can identify them, then that's when you can start your back testing. You know what I mean? It's hard to back test if you can't identify them. This is more so training the eyes to be able to see them.
Okay.
But before trading live, yeah, got a back test. You don't want to just start trading. You see it, feel like you have it, and it's coming up to the 886 because often you'll get respective. You got the Fibonacci zones, of course, but support and resistance is always going to play a major part in these patterns.
Okay. What's the difference between identifying and back testing then?
All right, so I can identify a bat pattern right here, right? Boom, 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 and I'll identify it. But once I've identified it, how do I back test it? I mean, I can see that it's identified, and I can see that the market rolled over afterwards. But I'm back here at 2016-06. I'm back here in June 2016. You can't back. I can't back test. I can't back test this bat pattern right here. All I can see that this is a valid bat pattern, and the market respected it and rolled over from there. But as far as back testing, you want to back test. You know what I mean? You got to find these things live. So back testing wise, what we have here on a back testing aspect, if I wanted to back test, if you want to do some pattern back testing, if I can move this crap. Back testing is more so, okay, I can see that I got an impulse here, right? Boom. You see what the market does. Fibonacci retracement. All right. We came up to the 618. We broke past, but we don't touch the 786. Boom. So we don't touch the 786, so we can project that we have a Gartley pattern right here, because we know that if it's a bat pattern, all we're looking for is for it to touch the 60%. If the 50%, if it touches the 618, then it's an invalid bat pattern. But okay, we go up here, we touch the 618, we don't touch the 786. So I can assume that what I have here is X, A, B right here. Now, I got to project the XAB move for this to be a valid Gartley pattern. I'd be needing the price from X to A to come down to the 618, and it just about does. It looks like it's on its way there now, but it can hit this 618 and come all the way down to A, still be a valid pattern. Let's say it does. Boom. Let's say it comes down to this 618, and I project it here, which is sort of in a zone, sort of hit right there. If it don't come back up, you got to stay loyal to the, or keep the same. If it don't hit the 618, I can't take it. But all right, let's say it hits the 618 right there. Once the C move has been identified, boom, we're looking for the C to hit right here, the 618. So we know that the Gartley, we're looking for an equal measured move, AB to equal CD. Let's clone it. Bam. Now, and this is an if. This is where back testing comes in. This is an if right here. Boom. That wouldn't work. All right. Now, this Gartley pattern will have to pull back. I would need B to pull back, well, probably at least to the 786 for this to work, because we can see that if it only comes to the 618, which is a minimum requirement for C, our equal measured move breaks our X leg. This would be an invalid Gartley pattern. I said that to say this. I can back test. How can I explain this? I can back test upon completion. Like, okay, even if I was going to buy the C leg, we don't know if this C leg is completing right here, if it's going to come on down. Let's say we got patience. It's all about patience anyway. We're waiting for this to see if this C leg will come on down to the 786 or the 886, as long as it doesn't break here. Maybe it does. But let's say it comes down to the 786. We take AB and we clone it, because we know that we need an equal measure move to complete a Gartley pattern. We bring it to C. Now we can see that our decompletion would pass B, which is a requirement, and also is below our X. So in this case, trash. Oops. Trash. In this case, Fibonacci retracement from X to A. What the hell? We're looking for 786 respect. See that it blew past the 786 a little bit. It's up there around completing around the 886. But what does it do Fibonacci extension wise? All right, so we got a 1/8. That's messy. All right, we can see we got a zone 127, which will be 100% of our X move, which is fine. So we'd be looking for price to complete here. Now, upon completion, if I haven't ever traded this Gartley pattern before, then I look to demo this. You know what I'm saying? I put my move in here. I'd get my Fibonacci inversion, put my stop up here at the 113, and I set my targets for the 618 of my A to D move of the 382 and the 618. Now that would be back testing, but for me to look left, like it's hard for me to back test this pattern right here. Got a back pattern, impulse down. I can see that the market came up. Yeah, came up, hit a minimum 50% right here. This is small too. I need this to be bigger. My letters in a bad spot. All right, got a 50% right here. We can see that this is the 50. We don't come up and hit the 618. Makes this, maybe a valid B move. to a bat pattern because we have respect of the 50%. Impulse down, X to A. I'm not going to write it out because we've been doing it, but then we move up here for A to B move. We can see that we got 50% respect. So we'd be looking for the market to pull back to what? A minimum of a 382 for our C move. We can see that we come down here and hit the 786, which is fine, as long as we don't break past our A move. Boom. Now, upon completion of that, same Fibonacci retracement from our X to A, the same one we use for our decompletion. We're looking for the market to complete up here at the 886. Indeed, it does complete at the 886. And what does it do? Boom. The market obviously rolls over before it comes back up here and probably would have stopped us out. Then it even goes lower. Nonetheless, it would have hit take profit 1 and 2. Why? Because our take profits would have been according to A to D. We would have been looking for that 382. Came to the 382, danced around right there, and we would have been looking for that 618 for our take profit 2. Boom. Knocked both of those guys out. Kept going. I don't think it's back over there. Yeah, this was 2016. No, it's definitely back over there now. It didn't make it back up there until 2017, though, nearly a year later. But nonetheless, I got this pattern right here, but it's impossible to I can't back test this pattern. You know, I've identified this pattern, but I can't back test it because I can't trade it. Why? Because it was in 2016. You feel me? Like, to back test, you got to be trading live in the market. I mean, you got to back testing is trading live, and I can't trade 2016. All I can trade is 2017, 2018, and upcoming. You feel me?
Absolutely. I really appreciate that. That was very, very good. Thanks.
Not a problem, bro. And on that note, that finishes our bat pattern. Do I have any questions on the bat pattern?
Are the bat patterns easier to spot than like the Cypher or the Gartley?
The thing about that is, like, you'll notice, like, all right, I go back left, I look left, and I identify them all. Like, I try to draw one out every time I identify it. I don't care if it was in 2015, 2016, currently. You feel me? I draw them all out because what that does is trains your eyes for it. So, all right, right now, Cypher, Bat, and Gartley, I can pretty much see them. I can almost see it without drawing it out. You know what I mean? Like, but at first, Bat was easier to see for me, but it's because that's the pattern that I took off to learn first. So really, when I took off to learning it and I was looking left and training and looking for them, then it's like, next thing you know, you're seeing them. It's like, damn, there's a bat. There's a bat. It's like you just, it's, you know what I'm saying? It's hard to explain, but yeah, you train your eyes for it. Even right here, we're just not even doing anything. I see this right here because my eyes are trained for it. Looked like it could have been a bat pattern, but it failed. Came up to the 50. It's a minimum. 886. That's why you back test, because that would have been a valid bat pattern. I have to draw it out, but that would have been valid. But look, probably not the best place to be taking it. You see the market came down, then what it do? Like, they ain't gonna win every time you see them either. They're just high, you know, high probability. But to answer your question, yeah, I think whichever one you pick up and study is really whichever one your brain, you know, you're gonna pick one out that you like more than the others for some reason. I don't know what it is, but yeah, these three to me are the ones. Some people like butterflies, you know, crab patterns, shark patterns. There's a lot of different patterns. My eyes aren't really trained for those, but nonetheless, if I plan on studying those more as well. But as far as now, yeah, my eyes are pretty trained on bat more so than anything. Gartley. It's Cypher. Cypher's pretty simple because, you know, you got that C leg that breaks down below the 127. It's pretty easy to see. Well, once you study and practice, I ain't gonna say it's easy because I spend a lot of time doing this. I definitely study more than I trade. You know what I mean? Like right here, you can see how the market broke down right here. That's Cypher pattern look all day right there. You bring out your Fibonacci retracement. I got right here. The guy came up to that 50% right there. You can see that 50%. So
I got another question. What happens if the market opens up in a gap? Does that like make it a non-valid pattern if it opens up with the gap, or as long as it stays like within structure?
structure. Gap don't mean nothing. Gap ain't. I mean, it means something, but I ain't worried about no gap. All right, so we got a gap right here. Let's see here. We got this gap, but impulse wise, that gap is right in the middle of an impulse. You feel me? So like, you see that we got this impulse move down. Boom. Then you got this impulse move up. Now, which is really more so like right here. Then you got this. Then you got this. Higher high, higher low, higher high, higher low. All of that's higher highs, higher lows on the way up. Whatever. But you got this gap in between here. What does it really mean? It don't really mean nothing. All right, so where it gapped to, you got the market. No, I'm tripping. Hell. So the market came right here and gapped. Only thing a gap means to me is usually it's a pretty good area of support wherever it gapped to. So it gapped from there. All right, if we look left, hell, this ain't no gap, but that long ass wick. I mean, I'm not gonna say that long ass wick is a gap, but it's definitely you can tell how price don't really like this area. We come up here, it's staying out of that area. Boom, get out of there. Boom, we going up to it. We don't stick around in here too much. Boom, go past it. Hell, over the weekend, shot past it so fast that it just blew up there. What you got is a strong zone. That gap is a strong zone. So once it gapped up, it came up, boom, came back down and retested off of the gap, same gap area. You feel me? So like the
Right.
gap, yeah, it's gonna be a strong area of support and resistance. But as far as like the move goes, like, nah, it ain't really, nah, nothing too important. I'd not pay attention too much to it.
Okay. Okay.
All we looking for is that, you know what we looking for already. We looking for those major areas of support and resistance, key areas of support and resistance. So like, boom, which, yeah, that gap is a key area. Why? It just happened to gap there, but boom, got respect right there. Respect right there. That's inside. Boom. Now the market came here and jumped up, but once it jumped up, came to there, went up above, came back down, and tested off of that same gap area again. So what's bigger to that gap to me is the fact that that damn area where it gapped to, getting all of these touches off of it. You feel me? Let you know how strong it is.
Gotcha.
I'll go back and look left again. Oh, what we got here? We can keep looking left. We back in damn 2016 in March. We got price bouncing off of that guy in 2016 in March. Let's go back. Let's see here. Damn, what we got right here? Got price bouncing off of that guy in 2015. Price gonna always bounce off of that guy. You feel me? So here in 2018, we catch price coming back down to that guy, which is a long way. This is a daily chart now, but and EU's been bullish for so long. But look, we catch price coming back down to here. What we know, we don't know if it's gonna. We know one thing: it's gonna hit and it's gonna get some action off of it. It's gonna either do this you feel me, and continue, or it's gonna do this, come off of it, hit that guy again, and take back off. What we do know is it's strong support, and we know we can get some play off of that zone. So yeah, the gap, more so, we're gonna look for strong support and resistance. Gap's gonna always gap up to some strong support or gap down to it, or you feel me? That's all I got to say about that, folk. You got it.
Thank you, Donnie.
Yeah. Any more questions before I close this thing out? I hope I'm doing good time. I usually get long-winded. Session be like an hour and a half.
Passion does that to you.
What good, bro?
I have a question. What's the lowest time frame that you can look on to look for patterns?
Any time frame, any pair, any stock. I don't even trade the 3 minute. Let's see here. I don't trade the 3 minute, but the first thing I see when I look on it, what we got here? For one, I look for them W's. Everybody can see that that's a W. You feel me? Like, I ain't got to measure it out to notice that W. This ain't no market maker M. You feel me? It's a harmonic. That's a harmonic W. That ain't no market maker W. That's a harmonic W. So, this being a 3 minute chart. Break that Fibonacci extension out. I mean, Fibonacci retracement. Because I got an impulse leg right here. It's obvious. Impulse down. Fibonacci retracement. We can see that the market came up to what? 50%. That let us know that we got a valid A-B move. This is pretty cool while we just did the bat pattern. All right, so once we notice that we got that respect of the 50%, we're looking for the market to retrace, make a retracement from our A to B move, which we better go from here. The guy came on up, same move. Boom, 786. Bat pattern, minimum requirement is the 382. Max requirement is extreme lows of A. We are valid at this 786. Boom. So once we've identified our C leg, we're gonna bring that Fibonacci retracement back out from X to A for the bat pattern. We would have been looking to get in at the 886. But again, knowing that X is always going to be a strong support, oftentimes on that bat pattern, you'll get price action come up and test that X leg before it roll over, just like it did right here. Even though we would have entered at the 886, our stops would have been fine, because looking at this right here, where we would have put stops at, probably right around here, because we can see what? It ain't rocket science, you feel me? Put your stops right here, because okay, we got this level right here, we got a level right here, but more so I'm getting respect off of this thing right here pretty strong. So probably put my stops up there, and you can see what happened. Market rolled over. That's a 3 minute bat pattern, you feel me? We've been looking at the 4 hours, we've been looking at the daily. It's a 3 minute bat. What happened? Market rolled all the way over. Market ain't even made it back up there yet. You feel me? More than likely, matter of fact, market's retested off of the A, and it's gonna keep pushing lower. But yeah, any time frame, any pair, it works. It works.
Thank you.
This is so sweet.
Yeah, man, it really is, man. Yeah, you should see me when I be. It's actually like, I don't know, bro. It's damn near like magic the way the market respect these levels.
I see that.
Somebody already done put in all the work for us, though. All we got to do is study, get that money, because that's what the fun part is. You feel me? Entering right here and then getting all that money right there. That ain't nothing but money right there. Boom. But yeah. Any more questions, fam?
Hey, thanks, bro.
Hey, not a problem, man. I want to thank Caribbean Blue Caribbean Blue, JM Pips, always gonna give a shout out to that guy. He pretty much, that's our coach, mentor. Gave us all our information. I mean, he obviously wants us to get rich. So we going for it. This is how we gonna do it. Feel me?
Yes, sir.
It's gonna retire me right here. I work hard. I work way too hard every day to be able to sit down in front of this thing right here for a couple of hours. I know I can make more money than I make painting cars. You feel me? It's just a time thing, but nonetheless, that's why I trade more than I study more than I trade, because I already know what's gonna. I already know what my future look. I already know what my future gonna look like. You feel me? Ain't no question about it. But yeah, I hope y'all enjoyed, man. If I don't have any more questions, we just gonna end here. Caribbean Blue, you got anything to add?
No, it's all good. And that was a lot of nuggets we got there. Hope everyone appreciated it. We appreciate each and every one of you, and hope that you all enjoy our educational series. Look out for us in 2018.
Oh yeah, it's gonna be strong, baby.
Yeah, we come in stronger than ever. So, of course, you can always hit us up. You can look for you can look out for Donnie, look him up on Facebook. We will be dropping these videos on YouTube. Follow us on Instagram, Caribbean Blue FXTT. And that's about it. This wraps up the Harmonic mini series. And thanks again, everyone.
Thanks. Love all y'all.
Shazam!
Shazam!